Stocks are at record highs, but there's been some market swings to get there. Right now, the VIX is trading at its lowest level this year, well off its 52-week high of 36.07, showing investors they're a little bit more calm as we head toward 2020. But what exactly is the VIX? How does it measure fear on Wall Street? It's time for Yahoo U. Brian Cheung is here with this week's lesson.
All right, well, class is in session. You may have heard of it before. It's called volatility. And at a high level, what it means is a tendency to change rapidly and unpredictably. In financial markets, this can be a key characteristic to describe movements in a security's price. Now, here's an example. So we have a 3-month chart here of two stocks, Walmart, which is the purple line, and Procter & Gamble, which is the blue line. Now, keep in mind, this snapshot was taken some time ago, so the prices have moved since then. But as of the time that this was taken, the two stocks were trading pretty close in terms of movement over the 3 months, somewhere between 2 and 3%. But if you look at P&G, again, the blue line, it's been a rockier road to get where it's at right now. So in mid-October, the stock was down as much as 4%, and in the end of October, it was as high as almost 3%. So P&G might be what you call more volatile in this case. And in the early 90s, the CBOE tried to come up with a way to quantify volatility in the overall market, not just with these single equities. And they call it the VIX, or sometimes colloquially referred to as the fear index. And here is exactly how it's calculated. No, I'm just kidding. I'm not actually going to walk through all of this. There's a lot of crazy Greek letters here. What it actually is it's measuring expected volatility based on the S&P 500. So why expected volatility? Well, because investors always want to know what expected returns are. And how does the CBOE actually measure expected volatility, though? Well, it uses near-term option prices on a wide variety of securities. So bear with me, but options are a whole separate topics. And what you need to know is that really it's a derivative that allows you to buy or sell an underlying asset at a predetermined price over a certain period of time. So people's expectations for volatility in the future is baked into the calls and puts in these options trades. So let's actually take a look at the VIX over the last 12 months in that case. So let me switch to the chart real quick. And again, this is the VIX. So as we mentioned, it's at a 12 handle right now. The highest level of volatility that we actually saw over the past year was in December of last year. The 36 handle, actually 36.07 was the high over the last 52 weeks. And the market, as you might recall during that time, was selling off amid trade concerns and worries that the Fed may have made a policy mistake by raising rates a 4th time for the year. Now, by large, investors were concerned that the U.S. economy was close to nearing the end of the cycle. Now, you notice, though, that things were calm through the first half of the year. Through January, February, March, April, we actually saw pretty close to the levels that we're seeing right now at around a 12 handle. But in August, you actually saw that a flattening yield curve and then an inverted yield curve actually pushed the VIX up to a new level between 20 and 25. Now, again, the VIX sits right now today at just over a 12 handle as trade concerns have eased amid a phase 1 trade deal. That is the lowest this year, levels that we haven't seen, again, since the spring. Now, something really cool about the VIX is that there's actually levels. So let me show you this right here. This is the VVIX, the CBOE VIX Volatility Index. Now, this measures the volatility of the volatility that I just showed you. So just like how the VIX uses options to figure out expected volatility in equities, the VVIX measures VIX options to measure expected volatility in, well, volatility. Are you following this? Okay, well, so here's how it works. If VVIX is low, then expectations are for volatility or fear to also be low. So you remember in the spring, it appeared to be the lowest volatility as measured by the regular VIX. Well, that actually lines up with the regular VIX. Right, pretty low levels at almost just about 80. But that doesn't line up actually currently right now, right? We've actually seen an uptrend in the VVIX. I mean, although not at necessarily the highs of the year, but a trend up, despite the fact that we're at an all-time low on the regular VIX. So one possible interpretation, it's telling us that while underlying volatility is low, it may not be for longer for right now. And this is where I stop, guys, because if we go any deeper, maybe there's a VVVIX, a derivative of derivative of a derivative, but we'll break that down.
There are also leveraged VIX vehicles in the ETF market, but we won't get into that.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.